Man, that CIB or CBI is super strong. I'd like to swing that one. So EIA today, I wouldn't be going off that report yesterday. Anything can happen here. Oil's testing really important resistance right now. The bulls are definitely in it. The oversold perspective is definitely on the top of the oil traders' minds for sure, based on trade. So this charting will take a couple minutes to load. The algorithm model takes a lot of juice from TradingView and RAM at the desktop level here. Getting some trolls online. They say that's good news, eh? Some funny DMs the last few days. I agree with oil, generally speaking, under pressure forever now. But in the short term, I think it's going to see a pop. If it doesn't this week, it'll see it next week, in my opinion. Every week that goes another week, advantage to the bears is decreasing significantly. And congrats to the bears on the last number of weeks here. It has been very bearish. I think this might be the switch. Just getting second legs going was tough. And it really doesn't do you any good as a opening momentum player to not get a second, third, fourth, or fifth leg. But it was better on the long side. Okay, so this is actually supposed to be at 10:30. Now, on the most recent reports, we didn't set algo charts because there was a decision. For those that don't understand this charting is done in advance. There was a decision set for right around the EIA report to possibly go up channel or down channel. This will be the last week that we show a lot of Epic's charting at report time, but now that we're in it for this week, this is the up channel. Now, obviously, that's the possible up channel, being that's where the trade has been. But what's important here is that this charting was done well in advance of oil ever getting to this channel. So Epic's algorithm is a model chart at this point being tested, and just entering coding over the last few months, and the actual coding of it to an IA platform or intelligent assistant is $12 million software development that we're working on. Those arrows, the green and reds, are my entry and exits. And anyway, the channels are these orange lines. Where you see the double lines there, that's not double vision, that's divergence that we're seeing lately. So oil is definitely getting aggressive here. We've got 22 minutes, 23 minutes to the EIA report, and the bulls are in it to win it. We'll see. I took an exit. Yeah, Matt's definitely right in the room there. The API reports, do not rely on those. I exited my UWT from yesterday. It did get a downdraft after I exited, or after I entered, and so I got out, flat. But anyway, all of these channels. So this is the down channel. This is the top of it, where this purple arrow is, and this is the up channel decision. This is the bottom of the channel. Here, I'll show you the channel really quick, that I could run in here. So this is the bottom of the channel. This is the top of the channel, and this is mid channel. So if you just pictured a runway, that's top, bottom's down here, and mid channel's here. The important part is that channel's, well, I can tell you 10 years in advance where the channels are. So this is future forward charting. This isn't, so you just think GPS, and I keep saying that to people because it's basically what it is. GPS with decisions in it. So we're 21 minutes or so, and the bulls have got serious. So the most recent down channel is right here. So here's the top of the channel, and you can see trade reacts to these channels near perfect, right? So there's the channel hit, hit there, hit there, hit there, and then it got up in here just recent for a possible switch at the switch here for the up channel. But we'll see. It's still got time to drop into this channel, and I'll show you at the bottom of this down channel how it reacted to it. So here's the decision for the up channel, and it followed it except for this one downdraft here. These trades, by the way, I did okay on the way up the channel. I could have just held and probably done better. There's all kinds of traders telling me last night on DM that they got the bottom perfect. Okay, well, if you could do that, that's great. So here's the bottom of the downward channel, this purple arrow. Here's the up side of the, well, it's actually right here. This is the top of the channel. Here's the mid. We did have a target in the down channel here. We didn't put one in the up channel. The down channel was there already. Or I'm sorry, that was the target for last report. The top and the two hit. Normally we put we do put two targets in for each of Tuesday, Wednesday, and Friday. It's just that with the divergence. So anyway, when it hit the bottom decision there, it's followed the channel up almost perfect. And now here we sit. So we are just under 20 minutes in. I'm just gonna do a little searching around here, and then I'll be right back to you. So I just got a DM on those green triangles. So those are intraday. So this charting, you'd have to go to, the best way to do it is to go to Epic's Twitter feed, I think. And there you can find links to all the different reports. Our technicians that trade Epic, their P&L is there. You'll also find invitations to webinars there. pricing, pricing links, subscription links, how to trade Epic. So this particular video, that was 22 hours ago, this shows you how to, okay, so this one's intraday. So this shows you the intraday, those green triangles, how those are traded and what those are. And so my entries are on here, some trade reviews, but the one I was digging for, if you looked long enough, you'd find it here. Or you just go to our YouTube channel, I guess. There's one on how to use, well, there's a few general ones on how to use these channels, trade the channels and that kind of thing. There's one there. This is one that was done a while ago. There's a newer one, but on the YouTube channel. So I'll just put this into the room real quick. Of course, it's one of the main questions I get about Epic, how to actually use the charting, because it's proprietary, right? So we had to create charting visual, a visual that represented the model that traders could actually execute trades on. And what it ended up being was a grid pattern. Lately, there's a divergence. It's not a huge divergence. It's 43.74 here to 43, so it's like 3 cents. It's not massive, but it's there. And if you look at trade, it's using the right of the two there. And last week it was using the left. Well, it used the left here. And to explain why that, we know why it's there, but to explain why would take, it's just, there's no reason to, it's complicated. But the important part of this is that this charting is there in advance, so it makes it really easy. So when you see me tweet how it's unfair, it makes it really easy. I mean, I get these DMs from oil traders saying, they caught the bottom of the, the channel there. Yeah, well, if you did, you're pretty good. Epic caught it, and almost always does, but not easy to do if you're trading a conventional chart. Not easy at all. I've been around, I'm getting pretty long in the tooth, and I know a lot of big oil traders, and that's not an easy task on a conventional chart. Oil doesn't respect a conventional chart like conventional charting wants it to. It respects an algorithmic model. You can see in this model that it obviously respects what was there, except for right here. It had a few downdrafts. It tested the fibs. So we've got 14 minutes. I'll just explain really quick how this model works, because this will be one of my last opportunities publicly to do that. This whole model goes into a new phase here soon, and when they go into, it's into coding phase, but it's going into a much more in-depth phase for our traders. And unfortunately, we're going to have to not share a lot of it until I don't know when, but that's been a struggle. Okay, so how this works is these gray lines here represent the algorithmic model time price cycle for general range. So what I mean by that is support and resistance on an algorithmic model chart. All of this is in advance. So this represents the support for the general range. The yellow line is conventional charting support and resistance. They travel together for whatever reason, but they are, a little apart from each other. Most times you can see oil bounce in between the two at decision time. This time, not so much. Oil came up late Monday, tested right here. See that? It came up and tested here, and then pow. Normally it'll bounce in between and then pow either way. Came back down after the API Tuesday at 4:30. That's that red line, vertical line. Wednesday at 10:30 is the green line, and held the channel, and normally you would see it bounce in between. So anyway, these support resistance are one of the primary ways that we trade the model. The channels that I just explained is the third most predictable way. These support and resistance are the second most predictable way. And then there's something called clusters. They've been 100%. But we only get those once in a while because the clusters are significant resistance and support. And then normally there's targets on here. That's another way to trade it. Another way to trade it are these horizontal lines. These are all either previous support resistance historically or fibs, depending on which line it is. Wow, this is really setting up bullish. Had we set the targets, we would have put one target right here and one target right here. So up the channel, of course. One target here, one target here, and down below the targets would have went one here and one here. So we'll see how it actually responds. I'm going to load for a trade here. I'm expecting to go long, but I'm not going to trigger that trade until it settles. Now, if you're going to trade, I should talk to newbies really quick, and I don't mean that in a derogatory sense. But new traders have to understand that there's serious volatility experienced around these reports. I don't recommend taking the trade in the first 10 or 15 minutes. If you're experienced, yeah, maybe, but that volatility, man, because there can be a lot of covering going on and you don't know exactly what's going on until some time into it. So I'm going to bring up a conventional oil chart too. I use FX USOIL, even though I'll be trading CL here likely. Well, I might trade you. See, I don't even have a plan for that. No, I trade CL. The advantage of the ETNs, of course, like UWT, DWT, is that if it's an intraday and you're really confident in it, you can get much better leverage on a 3x ETN. But there's many, many, many reasons, and you have to do the research why you don't hold ETNs for any amount of time. You will pay a price. Whether you lose or win, you still pay a price for them. They're expensive. They're not cheap. So on a conventional chart, and I tweeted this morning that one trader that I posted on TradingView, a real simple chart to the same effect. This underside trend line. Represented here on my chart. It's a pretty important line from a conventional charting perspective. Now, conventional charting does not govern oil. It has influence over it, but doesn't govern it. What governs oil is algorithmic trading. There's so much of it now. Well, so much that the Fed is after the US government to change the laws. But there's so much algorithmic trading in commodities and currencies that to think that conventional charting and the retail public, or even a lot of the commercial public, can affect the way it trades. It's just simply, it's just foolish thinking if you do any research on it. So, conventional charting has some, it's not like trading an equity. It's not like trading Tesla, even though the algorithms are in Tesla, of course. But it's more so in commodities and currencies. The reason why I say that is this trend line resistance here means something, but you've got to take it appropriate to what you're trading. The point is that it's getting up over it. And that was my tweet here when I copied that oil chart. It just makes it super simple to see. Depends on how you and where you draw the line, right? Yeah, I'll leave that there. So UWT sitting just over my entry from yesterday and exit. USOIL is getting serious. Now, here's what's really interesting about the algorithmic model is that we trade in what are called quadrants. This is where the channels come from. And these can go down to every time frame. We trade on the 30-minute because that's where the majority of the liquidity in the algorithmic trading community trades oil. But if you can picture a baseball diamond, so this is second base. So here's the outside of the quadrant, right side of the quadrant, left side of the quadrant, and lower. What makes this really interesting is that oil got up into this quadrant, and this is the test area between these two lines, bounced around, came back in, bounced around, and is now at what we call the inverse apex, which is the most volatile part of the quadrant because it's got the most width. So when we're trading the quadrants, the middle of the quadrant, the inverse apex and the apex, is the most volatile area because the machines trade that width very aggressively. As you get to the end of the quadrants, it's much more cautious trade in here, up and down, because you don't get the same width. But as it comes down here, the width can get really big. And then, of course, in and out of quadrants. It's interesting to me that the bulls have taken it up over resistance and into this quadrant. That's interesting, and out of the test area here. So those things are all bullish. So there's bullish signals on the conventional charting and bullish signals on the algorithmic model. Of course, the model goes a lot further than that, but that's the general idea, and that's all the time we have anyway. It's 5 minutes to the report, and I'm going to get my trades ready here. I'll be back on in a minute or two. Okay, so I got my trigger finger ready. We're 4 minutes away or so. I will end up pretty deep here. If it confirms up channel, I'll be really deep. If it goes, oil stays under pressure for another week here, I don't think short term there's a lot of risk reward advantage to being a bear. It's been sold off for a number of weeks now, and that time, in my opinion, has ended. Not that I think oil's going to do well, going forward, but for the short term, I think it's definitely ready for a bounce either this week or next week at latest. So what I'm saying is that I would leg into my accounts here pretty heavy if it confirms up. This, I'm hoping to be my trade of the quarter, to be honest with you. I'm a super transparent guy. Some people don't like that, but I can't care. When you're that way, you're that way. Man, I've gotten so much pushback on my oil thinking the last few days. I get it. Long term, short term. Okay. Sorry, getting my trades ready here. I think it's funny when people gang up together. That's the funniest part. It's like being in high school. What are you talking about, people? Okay, focus. A couple minutes left. People are funny. I worry about myself. Forget the rest of the world. Winning. It's not easy to win. Okay, we're a minute and 30 seconds. See the bulls, man, there. Look at that. Look at that. Bullish. Could be some covering in there. I say that chuckling to myself. Of course there's covering in there. The bears on hopium there, covering right before the report's released. Hopium in terms of, you know, nobody knows which way it's going to go. Nobody knows. Crude trading at 44.30, 44.27 on US WTI FX. So it's basically trading where it was at its high yesterday. Well, just under, in that range, 20 seconds away. Yeah, Matt, I was thinking about degas, but we'll see. Here we go. There's pressure. Oh, there she goes. Right up to the fib. Up to the quad there. The top of the quad and into the fib. So I don't have the report yet here, but when I do, I'll let you know unless somebody else finds it first. So I'm just going to zoom in here a little bit. Okay, so we're confirming in this up channel, short term anyway. Those stops just got whacked. Some bears got whacked there, boy. See? That's why you don't take the trade right off the bat. Look at that. Crazy. Let's see what happens here. It's a test. Ooh. Right at support. Unreal. DOE Cushing crude inventory change week over week minus 297K. Estimate minus 600K. Previous minus 1,080K. .118 million build. So this should confirm up. But you got to be careful with that first move. So it came back, tested support. Now it's getting momentum up. Testing that 4450 area on CL. So I'm long 44.38, 1/10. So 1/10 sizing for me is a test size. $44.30 along 2/10. So I'm in 3/10. Yeah, it's a good, pardon me, a good point, Coleman, on production. There's no absolutes here, but it should confirm. Those fibs above overhead, the blue and the red, those are really important. The most that I would leg in here is on my trades is half, basically 5/10 until it confirms above that red fib there. But there's a lot of room here on the model because we were right at support. We don't get that opportunity very often where we're at the algorithmic model wide range support and the timing decision. So at 44.51, I'm in the other 2/10. So now I've basically got to sit and wait for those fibs to prove out. If they do, then I'll scale in as we go up channel. Now there is this one anomaly here, this yellow line. That's a fairly serious conventional charting resistance. So that is a little bit of a concern on the model on this particular quadrant. There's resistance here too, that's the quad resistance. So these two kind of come together in this area. So, you know, exactly where I would take my other 5/10, I'm not sure, but I'd probably scale between here and here, but I'd for sure be in 100% here at 45-35 range if we get there. Right now it's all a big if. First hour or so, it's tough. So I'm just going to mark my entries here. Wish my entries were a little lower, but they're not. So I've got 2/10 here. Now CL and USOIL WTI FX, they're off by a few pennies, so you got to take that into account. So I was in 2/10 there. 1/10 here. And 2/10 up here. Representing the 5/10. Unless you're trading spinal tap, and that'd be 5/11. Okay, so we'll see if that proves out. If not, if it goes down channel, I'll have to flip. I don't know if I would flip short though. I'm not real confident in the short risk reward right now. So I'm going to let this prove itself out. Thanks for joining us. I'm going to hit the recorder right now and take a quick break. And unless something changes in this trade, I won't be back until lunch. Well, actually, you know what? I'm going to take a look at the momos really quick too. So thanks for joining us for the report, and I'll hit the stop button now.